What's good, ladies and gentlemen? I can't believe I've actually just done this. But I pressed record on my OBS. So I've been speaking for the past 2 minutes, thinking that I was actually live to you all. I don't believe it. Welcome to tonight's live. Bitcoin has taken a bit of a tumble. What's the story, guys? Vector candle recovery. Simple as. But there's more to it. For once, we're starting to get information about cryptocurrency and investors are reacting to it. Tonight's live, we're going to break down price action on what to expect from Bitcoin coming into the weekend. We've also got the idea of Mr. Brian Armstrong putting it out there, Cryptopocalypse, talking about the idea that staking is going to be a bit of an issue and the SEC is knocking on the doors of crypto. Now look, we've had worse news and Bitcoin frankly reacted to the FTX scandal, but not as bad. Because quite frankly, FTX to me was just an altcoin that is no different to a pump and dump scenario. All right, there were other investors involved. Credibility has been killed for the cryptocurrency space. But when you got Coinbase CEO, Mr. Armstrong, talking about it's going to be a problem and the SEC is going to start knocking on doors, they're always going to go towards Coinbase because Coinbase is, of course, listed on the US stock market. So every regulation possible is going to be scrutinized on any company that isn't regulated. How's that going to look for crypto overall? How's it going to look for Bitcoin? As much as we are all the advocates of cryptocurrency and Bitcoin, at the end of the day, Bitcoin is going to react because people operate on two bases, fear and greed. That's the truth of it all. In other news, we've got the idea that the CPI data is coming out next week on Tuesday. Boy, let's hope that the CPI data does come in and show that inflation is coming down. So we'll get an initial reaction to that. Price may actually come up from this current point. But how far is it going to go down now? That's the question. We've got Bank of America declaring downgrades on Deutsche Bank. Why is that important? Well, Deutsche Bank, Goldman Sachs, JP Morgan, and you've got all other banks as well. They are the basis of the economy because they go to the governments and amongst themselves, they borrow each other money and then they send it off to the consumer via mortgage rates, whatever, loans, you name it. They circulate the money. They get it, print it, do what they do, and they pass it over to the consumer. Now, if they're getting downgraded, that only means that they're not hitting their estimates. They're not hitting their profits. That means business is slowing down. Now, this is no different to what had happened in the subprime mortgage crisis back in 2007, 2008. And you will find, ladies and gentlemen, that they keep going on about this time because that was deemed as the biggest global financial crisis in history. Worse than the 1929 Great Depression in the States, a Wall Street crash. So why are we getting these downgrades? Because the economy is slowing down. But there's a war happening. And US defense contracts are doing great. Today's article came out. We had another construction company with $500 million contract. Construction? We'll be checking that out later on in the stream. So, ladies and gentlemen, let's get with the flavor. Let's have a look at what's been going on in the markets. Here we go. I've done this so wrong. My days, I have done this so wrong. What? I've done this so wrong, haven't I? I've actually started talking to you. I don't believe it. Anyways, listen to this, right? No, we're going with the live stream. I was just about to end the live stream. That's killed my flow. Anyways, Bitcoin. Let's have a look. Coming back into the 4-hour vector candle recovery point. This is very important because we are now breaking the key 200 EMA. That's important. All right. This area right here, given that it's been broken, was a safety net for some traders. Because people were looking at that saying, oh, Bitcoin's going to find support at the 200 EMA. But when we actually look at Bitcoin's price action closer today, you can see that they have been aggressive by spiking price lower because there's orders down here. Mad liquidity, mad money down below. Check this out. You see this group of liquidity right here? Doesn't look much, but this is the 7-day chart of Bitcoin. We've got this pool of liquidity here at $3.267 billion worth of long liquidations. Let me show you another interesting chart. Check this bad boy out. Look at this. Come on. Here we go. Now we got some interesting conversations to be had. What we got here? So, by principle of three, we've got liquidity here that's been taken, $18.194 billion worth of longs. Pay yourself. The next zone, 16.8 billion. Below that, and that's at 20,900. Below that at 20,800, we got $18.9 billion worth of long liquidations. What blows my mind is how on earth are they taking those liquidations? Why ain't people paying themselves? Because people hold on to the idea that it's going to turn. All right? Fear is a nasty thing, ladies and gentlemen. It's horrible. And you can see that they're eating up that liquidity. The final pool at 18,500 could take us to $20.9 billion worth of long liquidations. Like I said to you, the market has no interest in your perception of value. They don't care if you think Bitcoin should be 60K, 200K, whatever. They care about where you believe it's going to bounce from. And this chart is clear as day, showing where the money is. People didn't believe Bitcoin would come down to these points in the chart that you can see. That's why they're making their way towards it. Go back into the chart itself and you can see on the hourly, Bitcoin is taking an absolute nosedive. And it's not that much of a nosedive to some people, all right? But when you look at it from a day trading perspective, they've come away from the daily open aggressively and the 800 EMA. Now, let's go back to the Golden Cross. There's the Golden Cross right there. So people that have taken trades on the idea of a golden cross are now being challenged. We look on the chart and you can see that the last point for Bitcoin on the daily would be inside of this area right here. 50 EMA, because the 200 EMA looks like it's going to get taken anyways. But the 50 EMA is the critical point for Bitcoin. If they break the 50, it's yippee-ki-yay to the downside, and they will run and eat that liquidity. We know that there's liquidity down here. I just read you the figures, ladies and gentlemen, and it's madness. Pay yourselves, man. I know we go on a bit. Like, I mean, let's be honest. I know I keep going on about it. You know, pay yourselves, take your money and run, because you don't have any idea where Bitcoin's going to go. I don't. No one does. But we try and improve the odds of a trade playing in our favor by projecting out the idea of where it is likely to end up. It's either that or nothing. That's all we can roll with. Okay? Who's this guy? Pay yourself. What's good, Thrizzle? How you doing, my man? Anyways, check this out. Cryptopocalypse, Coinbase CEO issues serious contagion warning after Bitcoin and Ethereum price crash. Brian Armstrong, my guy. Brian Armstrong, he's not, he's not alien to these little comments that he puts out. I mean, he's a top fudder. I ain't a fudder, I'm just telling you what he's saying. Okay? But the impact that this Kraken situation is, where the SEC has gone into them and charged them $30 million for selling unsecured securities, it's only going to have a ripple effect in cryptocurrency. The only next biggest platform that I can think of is Binance. What's going to happen there? Are they going to go for Binance? Who knows? But Coinbase CEO, when he says something like that, hasn't mentioned anything about withdrawals and what's been going on the withdrawals process. Because if people are taking money out of staking platforms, they may have mentioned that. But he's just trying to let people know for the serious problems for the biggest crypto companies. Well, the biggest ones are Binance, Bybit. Who else you got? You got PancakeSwap, which is part of Binance anyways, the Binance Smart Chain. All right? You got Solana. So it's one of those ones where you're like, do you pull out your money because of that fear? It's until the SEC comes knocking on their doors. That's the truth. Okay? More articles right there. Staking crackdown. Here's what it says about crypto. So just do your due diligence, guys. Make sure that you've got your capital. And this is the thing about cryptocurrency. You're sold on the idea that the coin's going to moon. Cool. Do you have the patience to wait for it to get there? And what does it do before it actually gets there? That's the problem. Are you able to absorb the idea of it going down? Look at this, Bitcoin taking a nosedive, right? Cool. You look on the 30-minute time frame and you say to yourself, all right, what does it look like Bitcoin's going to do? In my honest opinion, Bitcoin is going to do something very, very interesting this evening, all right? Now, I can't give you signals. I can't tell you exact price points, but all I can teach you is the idea of the hybrid system. So if you haven't done so already, make sure you check out the Traders Reality website and follow the steps so you can download the indicators free of charge. Now, check this out. TikTok goes after Twitter by allowing adults-only content. Is TikTok going to take out everything right now? It's already interesting that YouTube's trying to copy, in essence, meet to the demand of shorts like TikTok is. Because everyone's on TikTok. Flick, 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 done. And you can learn a thing or two on TikTok, man. There's some brilliant people on there. But did you know that a duck has a corkscrew penis? Talk about getting screwed, man. Anyways, next. Barclays is being probed by the UK regulator over anti-money laundering systems. This is what frustrates the life out of me. These banks, Barclays, HSBC, Deutsche Bank, Bank of America, they're governed by codes of practice. Yet UK regulators stepping into Barclays. You understand what Barclays is? These guys are a massive bank, massive global fund around the world. Everyone's got money tied up into Barclays, and Barclays would be like the UK version of BlackRock, in my opinion, because of how many fingers and how many pies they've got involved in everywhere around the world. And when they start getting probed, that's not looking good for Barclays. Not good. But we'll see that article right there, and then people will forget about it. That's the truth about the marketplace, ladies and gentlemen. All right? Now, something that you need to be aware of. This article came out. Bonds slump at the end of another bad week before CPI. The New Year's bullishness has quickly faded. If the bonds are dropping, as you can see, now you guys remember me talking about this gap in the chart for the bonds? Where we got? Here we go. 1 hour time frame. Actually, 4 hour. Here we go. Remember this bad boy right here? Welcome to the recovery of that zone. We've been waiting for that bad boy to come into play for a long time. And it's come out. Because the bonds weren't moving up really during this rally to the upside. Because when you buy bonds, you're buying the basket of assets that the government's involved in. Because you want a safety net. You want to be risk-free. Not risk-free, but give yourself low risk on your portfolio. Institutional fund managers split their portfolios usually between 60% stocks and 40% bonds. We've seen a bit of a transition where it's now looking like they want to go into bonds more than stocks due to the volatility of what's going on in the world. Now they're taking their money out. Where are they going? Dixie. Dollar dominance, ladies and gentlemen. Coming back into those vector zones that we've been marking off during the lives, giving you the footprints to understand the journey of price. And if dollar dominance is coming in, Bitcoin stands no chance in moving up. What you've got to be aware of is when Bitcoin doesn't move, when the dominance of the dollar moves first. Bitcoin's going to pull a surprise afterwards. Okay? Going into the NASDAQ and the S&P, they haven't been faring too well. Full vector candle recovery near enough for the NASDAQ. Happy days. Earlier on today with the Patreons of the channel, shared them this projection on Bitcoin's price action from today. We anticipated a move up to see a bit of a recovery. But we didn't get that much of a move up. They managed to hold in and around the daily open. Then they ripped even lower. So we weren't in a bit of a surprised mood when Bitcoin did drop lower because, and I'll explain to you now, all right? This is where you understand the utility of the hybrid system. In front of you, you can see right here. Bitcoin has left this green vector candle. Green vector candle is just a point of interest in the chart, all right? Where there's an imbalance, where there's been more buyers as opposed to sellers. But we understand something different. We know that in order to buy, someone has to sell. So those buyers were sold to. So who's in charge? The seller. The seller controls price. One of the key concepts of the hybrid system is to pay attention to the whole and half number principle. What do I mean by that? Take a whole number that you see in the chart. What we've got is the 23 zone, okay? Right in front of you. Do this practice, ladies and gentlemen. Use the weekend and do this practice and you'll understand what I'm trying to convey. The whole number principle says that Mr. Market Maker likes to do what? He likes to build his shorts above these zones because he's getting the best possible price fill in that area. That means if you've got an investment, you want to sell it from the highest point. So what you're doing is you're bagging up all these guys who've got commitment to take on your sell. Happy days. Because at the same time, people are buying because that's what people have been programmed to do. Buy at the highest point. Slap yourself every time you see someone that says you should buy when price is rising. Slap them and slap yourself if you've even had that conception in your mind. However, remember, you're a momentum trader. It's different. You might be taking advantage of the movement up. So then what do? You're buying at the lowest point, like here. This is where you buy. You don't buy when it gets to this point up here. All right? That's why when you see price consolidate right here, it's those same traders that are trying to buy with the fear of missing out. And then when you see price stab down like this, it's shaking out those same people who brought when price was at the highest point, making them believe that price is going to go lower from that point, and then they instantly reverse it back up and do exactly the same again. And this time they do it around the whole and half number. So 23,000 is the whole number. Market Maker builds his shorts above key notable areas. The hybrid system teaches you and gets you to be aware of when you see these big candlesticks right here. Because if I remove this, okay, if I remove that and we just go back to the traditional price action or traditional candlesticks, you're going to see that and say to yourself, oh, we got bullish behavior here, big bullish engulfing pattern, happy days. It's showing clean support inside of this zone. You go into the hybrid system and you can see green vectors, blue vectors appearing at the highest point and not going anywhere, suggesting that something is going to change. As well, if you have an understanding of the hybrid system, you'd be more cautious about running for longs from here than you would going for shorts, because you're seeing the behavior of the market maker. The two clues were the stopping volume candles up here, where the biggest amount of volume that came in at that point. Look at that. Blue vector 1 right there and the violet vector, well, for all of that zone. Look at that big green candlestick right there and then look at the volume down below. Nothing's happening there. How can you be pushing up? Now, divergence traders will look at that and say, oh, there's a divergence in the volume. Happy days. That's one way of seeing it. The stopping volume candles coming into play right there are the triggers to let you guys know as traders of the hybrid that something's going to change, because if they wanted to move price further up, they would have bounced from this point because the volume corresponded to that move, but they snapped it back and reversed it. Okay? So now with that being said, they've made the move away from from this 23,000 zone. They worked their way down to the 22,500, broke that liquidity, as you can see from here. 22,500, half number principle. This is where you naturally expect price to drop, retrace, continuation lower, which is what we were expecting today in the Patreon right here. And it just went for it. It just flew out. That was from yesterday. And it's just flown out to the downside today. Complete collapse. Now, from the high, Bitcoin has lost a bit of ground. Where are we at? 11% since its high. All right. Now, if you guys are looking at this, now, if you're like day traders or if you're holders, then naturally this move doesn't really mean much to you. Okay. Because you're coming into what? What have we been saying? We want the retrace to the 200. Now, this is the proof in the pudding. That's where we get the idea as to whether or not Bitcoin is going to try and make the move from here to achieve the pattern. All right. This is the pattern that we're talking about. 2 entry points. There's the advanced entry right here, and then there's the safety entry at the top side there, because you're hoping that the momentum will lead it higher. All right? But it's all going to be about what it does at this 200. It still has not hit that 200 EMA just yet. It's missing it. So there's liquidity at that point. We know that from the high block. If we go mark up the price on here, and we look at that. Let me get rid of this. Look at this. 21,383, yeah? Check this out. 21,383. They've eaten that liquidity. Is it 283 or 2383? 21, 317. 21,317. That'll take us to right there. 21,317-ish. Zoom in, man. What are you doing, bro? All right, inside of this area here, there's $6.428 billion worth of long liquidations in that zone. Upon those liquidations getting triggered, people will set sell orders in that area. So a spike lower, retrace up in the same candle. This is the daily time frame. So just be mindful of that. Okay? Now we're going into the weekend. Some of you might be trading the weekend. Price might bring us some flavor this evening, so just be careful. But going into tomorrow night, when it's Saturday, the market goes a bit quiet, but the psychological levels will be formed at that time. What are the psychological levels? Takes the first high and the first low that is formed at the start of a new trading week. This is where the business starts in crypto. All right? So just be very cautious trading tomorrow night at 11 p.m. GMT, because this is when it's going to start getting interesting. If they don't make the move tonight by Asia, they're not going to make it happen until they step into the new start of the crypto trading week, which is tomorrow night, Saturday, 11 p.m. GMT. Now, if you are new to the channel, be sure to like and subscribe. You haven't downloaded the indicators, check out tradersreality.com. You want to learn more about the hybrid and the projections that we put out, check out the Patreon, and I'll be checking in with you beautiful people next week. We'll be back in the office. Mad love and respect, guys. Take care of yourselves. Peace.